Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis, stocks, ETFs, and indices, so you can become a better trader. All right, this is the weekend edition. We're going to take a look at the market action here the last 2 days and for the week. We'll look at our indicators. We're going to then focus on ETFs today. We're going to look at our key ETFs and then our sector ETFs. And we've got 10 different sector ETFs I'm looking at, and these are the most liquid ETFs. Okay, let's start off here with the Dow Industrials, up 211 points yesterday. So I tell you what, we're bouncing around like a yo-yo, and a lot of people are just, you're just not sure what to make of this. Just, of course, all of a sudden the press is like, oh, experts say volatility is back. Well, we've had some volatility. The problem we've had is since January, the first half of the year, January through June, this whole segment here. I think primarily people are measuring the SPX, and we'll look at that in a second. That range of action as a percent of the price has been extremely low, and actually some of the people have said it's been the lowest in decades, if not longer. So it's a really, really long period of time that this has gotten very compressed. Well, it's like I've talked about before, compression leads to expansion. The markets cycle. Nothing stays the same, ongoing. It always is going to change. It's going to migrate. And so what we've got here is, we bounce back. Let's take a look back here on the 7th, which was Tuesday. So look at this big bar that we have. Let me blow it up a little bit. This big bar we had on Tuesday. And everybody, you're looking, thinking, well, wow, is this a reversal bar? And then we have this big down bar on Wednesday, and it's inside. And then we're on Thursday, that trading range is still inside of Tuesday. And actually on Friday, we barely got outside of that trading range. So literally the last 4 days, we've been trading inside the high and low pretty much, slightly above it, that was established on Tuesday with the wide ranging movement that occurred on Tuesday. Now, this would have really reversed if we would have gotten a close down below here. So right now, this looks like we're consolidating, although my caution is we've now got a close above the 10. Now, I like to see more than just one close above the 10 to tell me we're reversing or whatever. But, the short-term trend and intermediate-term trend are still down. We are getting this support in here. Now, honestly, when I got this close here and this action that just reversed all the way down here, I would have thought that we would have broken down on Friday, and we didn't. So, we'll see. And we look at the S&P 500, we got a similar type of volatility that's going on, and it bounced off of this support area in here. This support zone has stayed in here, and this definitely did stay. These 3 days are within the trading range of Tuesday. So what does that mean? I don't know. My interpretation of that is that, again, we're not pushing higher or lower from the range that was set on Tuesday. So we could continue to consolidate in this for a little while, and then we break above the high here or below the low here, and especially on a closing basis, that could signify, the next short-term direction that we're actually going to take. Right now, the market's chopping, trying to figure it out. And not surprising given what's going on with Greece, and then you got, China and all of the dynamics going on right now. All right, the NASDAQ, a little bit more of a flagged or pennant type thing, consolidation pullback in here. Now these bars, why is this one dark blue and this one dark red? This one's dark red because it was a down day and the close was below the open. Okay, so it's a dark bar as opposed to a white bar. It's a dark bar whenever the close is lower, and it's a red if the close was lower than the previous day. And I say close was lower than the open is what I meant. It's a dark bar if the close is lower than the open, and it's a dark red if it's actually a down day. So the next day we actually had a close below the open, so it was a dark bar, but the close was higher than the previous day, so it's colored blue. Okay, so that's the difference in here. So the red bars are all down days. The blue or white bars are all up days. So that's the translation in terms of what you're seeing. New York Composite, similar type thing. Now I started looking at this and said, okay, well, we got this little panic going on here, pulled back to what was potential resistance, which is what it showed up to be, because then it sold off here on Monday, you know, Tuesday, this big reversal type day that actually did not reverse. And then now we're pulling back up. So the real question in my mind is, are we going to run into resistance again at this point here? Clearly, this area down here provided some kind of support. Now, I would have thought, you know, breaking below that we would have got some continuation downside, but no, we did not. So now you literally could create a support zone in here, which would be, let me use my crosshairs to line it up. So I would take that low. You know, let me just start it closer over here. And so now what I would do is I'd look at this and say, okay, well now clearly, you know, we're getting some kind of support zone. You know, the previous support, and let me just extend it right, make it easy. So now we've got a potential support zone right in here that we're gonna have to watch to see. And then we got this little resistance zone right up there. All right, the Russell 2000, similar type thing than the NASDAQ, you know, pulling back. Again, we get the short-term trend down, but the intermediate and long-term trend are still higher here, you know, so we're going to see whether or not we can continue to get to move down. And let me just step back to the S&P and the Dow. I still don't have any reason to change my wave count on this. You know, we still could be working wave counts within a third minute wave, okay, a third wave down here. Get rid of the crosshairs because I don't need them. And this could be, we could be looking at like a 1, or the 1 stopped here. And what I need to do is really, you know, you almost need to look at the hourly charts a little bit better. Or this actually to me looked like we're doing some type of flat is what I was trying to say. What I was trying to, all of a sudden my mind went blank. I was like, you know, this is a flat. And so we could be doing like an A, B, C pullback within a third wave down. We'll see. I mean, there's many scenarios that you could carve out. I mean, I could carve out and say, okay, well, maybe we're doing an A, B, C, and this is the end of it, and we're getting ready to move higher. I mean, I don't quite believe that, but, you know, again, we got to, you just carve out potential scenarios and then let the market tell you what's happening. And that's all we can do. I mean, we can't, no one knows what the market is going to do. All we can do is try to read the tea leaves and adjust. And that's what this is, a constant game of constantly, you know, adjusting, adapting, and then adjusting, you know, your stops, your targets, all of that. And that's what you've got to do. All right, so let's move into a quick look at the long term on the weekly. So again, the weekly extended down, got a little bit of a doji bar in here. And it's coming right off the 55-week moving average. The S&P 500, similar picture, almost identical picture actually. The NASDAQ on a weekly basis, a little bit more of a kind of a, I wouldn't call it a bullish bar, but it's more bullish than ones we just looked at. I'm not seeing the demand index went negative for the first time since January. The DI minus is above DI plus on the weekly bar. And of course you've got the RSI, which is still above 50 here. I need to alter this picture a little bit, but let's see, we'll take a look in the last one. Well, we got two more. New York Composite weekly right here. This is again selling off a little more. This has been weaker in terms of all the indices, I believe. And then the last one is the Russell 2000 weekly. And you know, again, this one, you know, it and the NASDAQ have been trending up. And now I'm wondering and skeptic, you know, I'm thinking that we've got, you know, 5 waves up into this move here. We are breaking some trend lines. You know, when you look at this, I get my crosshairs. You know, you could say, well, we broke a little trend line there, and then we snapped back. And you could take the same pivot point and you could say, well, we broke a little trend line there. Or you could even, take the two pullbacks and see that a trend line between this point here and this point here was broken this week. Okay, so now we're setting up for a potential. We got two closes now below the 10-week on the Russell 2000. So we could be in the process. Now we had the same thing back here when May 8th, okay, and it didn't roll over and it just pulled back up. That's why we got to watch and see what kind of action are we going to get next week. All right, let's take a look at the indicators, short-term trading index. There it is. Okay, so let me go back. I was looking at something on this. We got a couple extreme readings here, especially on Thursday, pretty extreme reading. So the 10-day has pulled back down in here from this this reading that we got on Wednesday. And so now we'll have to see. I mean, this has consistently been some kind of short-term bottom in the past, the majority of the time anyway, not always the time. But my only caution on that is if the market starts to roll over, it will continue to push that limit and continue to push above a 10-day above 1.5. The VIX and CBOE, where are you? There we go. Okay, so the VIX, we got a little bit of divergence that showed up here, and that showed up on Friday. So wasn't quite sure what we were going to get, but when I get that little pause type action, almost like a little, when it's leaning over this last little move right in here, it does exactly what it did on Friday. I mean, that's what I kind of look for sometimes. See how it kind of paused here. Now this one's a little more horizontal. This one is a little more of a flat line. Now it doesn't always do it, but it's kind of an indication that something's up. And so now we'll see. I mean, we're getting some divergence. We'll see if we get some kind of continued correction on it or not. And you can see what I'm talking about with divergence, right? This is on the RSI. And so the closes, this is based off of closing prices. So if we look here and go between the closes of those two numbers, right in here, the VIX pushed higher, but the indicator did not. So now we're not getting it here. So one out of the two indicators. I don't have a demand index on this because there's no volume. I don't have a volume reading on the VIX. So one out of two indicators is showing that. So we'll see. High low. Let's take a look at that. Knows where I want to go. Anyway, so we're bouncing back up. Remember, I saw this divergence right in here. Well, it seems to have come into play, and we've pulled back up. But really, it's just we're almost back up to zero. So even though the market was up over 200 points on Friday on the Dow, we still had 12 more stocks down, hitting 52-week new lows than new highs for the day. Okay, so we still had a negative on this picture and on this indicator. So the last one we'll take a look at is McClellan oscillator. And a similar type picture on the McClellan oscillator in that it got extreme. So here we got minus 150 and plus 150, and we got the zero line in between. Okay, so you got extreme reading in terms of oversold. We got this bounce. We're now back up into positive territory. We're just going to have to watch to see where we go from there. I mean, I would call this back up in neutral territory. And the last couple times we've gotten up into that range, into the plus 48 to plus 58 range. We've then turned back down. So we'll see. We may have bounced as far as we're going to bounce. The put to call, let's see, the 10-day put to call is 0.75. So it is, let me pull it over here real quick. Okay, so it's 0.75 is the 10-day moving average. Here's the actual readings. And this is the Chicago Board of Options Exchange equity only put to call. So I'm just looking at the stocks only. I'm ignoring the indices and all of that because sometimes it could just muddle up a lot of that type of stuff. So you can see how this 10-day has risen dramatically from back down, what, 0.58 was the lowest in the period of time. But this is not an extreme reading yet. I mean, you got to get up into the 80s before you get an extreme reading in terms of some kind of, bottom is what I'm talking about. All right, so now that's it on the indicators. Let's take a look at the high yield bond fund, HYG. Okay, so the high yield bond fund bouncing a little bit here with the market, a couple of days, but you can see it was trending down. We've definitely, pushed down lower, and we're continuing to be in a downtrend here. And yes, we've broken to lows that were lower than back in January. So we've taken those out. Now we haven't taken out the December lows yet, but it's interesting how the December lows took out the October lows. So, I mean, we're in a pretty significant downtrend here in the high yield bond fund. And let's see, the next one is TLT. Okay, so TLT to me is resuming its downtrend. Now, I'm trying to make sense out of this wave structure in here since this one I've got marked 4 here. And you can see we had this little counter trend, pretty sharp, almost like an A, B, C counter trend. And then look what's happened the last 2 days. Boom. Interest rates have risen. And the bonds drop. Okay, the price of the bonds go down. These are prices when interest rates rise. And so the trend on the bonds, on the prices, long-term bonds are still going down. Okay, and they've been going down since the peak back up here in January 30th. So since that point, we've been in a downtrend, and I am looking for, I've got this marked as 1, 2, I'm looking for the, the 5th wave to complete, but I'm not seeing a clear 5 waves here, and this could be doing something a little bit bigger. I'm not sure, so we'll continue to monitor that. Next one we'll take a look at is the dollar index. Let's see what the dollar index is doing. So the US dollar sold off, rallied back on Friday, and the last 2 days, well, let's see, on the 8th, which was Wednesday, it closed 96.29 and it closed 96.02, so slightly down over the last 2 days. For the week, we're up, because here was, well, yeah, it actually did get a reading on the 3rd, even though the market was closed, because the world is trading it. And so 96.11, and we're still slightly down, almost flat on the week, as you can see right here. But the short-term trend is still up, and so I'm still looking for this to push, and it'll be interesting to see. Right now, I'd be looking to see that this gets some kind of a bigger move higher. And the next one we'll take a look at is oil. And we'll see what's happening with oil, with the dollar doing what it's doing. And there we go. And U.S. oil is continuing, of course, this day, big drop on the 6th on Monday, big gap down, and then, continued down on Tuesday, and then we've kind of stalled out the last 3 days. So, again, the short-term and intermediate trend are to the down. Actually, all 3 trends are down because, I mean, look at this, the long-term trend. And I'm saying the long-term trend whenever the 55 is below the 233, but when you look at that 233 and it's coming down like that, the long-term trend is down, and it has been ever since mid-year of last year, for the last 12 months, basically. All right, and then the last one is in the key ETF area that we're taking, what I call the key ETF areas, is gold. And so gold's down for the week a little bit. GLD's down for the week. We had a little bounce and then kind of just settled. I think it was, what, up 0.13 for the day, so not much movement. I'm still now, as my primary scenario, looking for this to continue to move down. And so I'm watching to see that it takes out this point right here. That's the next thing I'm on watch for. The low at 109.77 on March 17. So that's what we're watching. And let's see. The next one we're going to take a look at is, okay, our traditional sector, got the wrong window here, our traditional sector ETFs. So we're going to start off with the semiconductors. And boy, the semiconductors have really gotten whacked. They've really killed this. So to me, for the economy, this is a big negative that the semiconductors are breaking down and breaking down so hard and pretty quick. I mean, they just reversed, and we've got a little bit of an A, B, C. And so I'm kind of wondering, I'm just watching this wave count right now. In this wave count, I'm seeing a 3 wave. I'm not seeing the 5s yet. Got a dotted line here at this low, and it turns out that this low on Thursday, this big bar, which I thought was pretty negative, that's why a lot of times it's hard to trust the candlesticks on a one-day basis to me. Anyway, I mean, this is just the way I feel about them. Unless it's a really obvious type of setup, because this was a big engulfing bar and it didn't really do anything. It bounced up. Now, granted, this day on Friday was an inside day, so that's not to me really directional of any kind. And the only thing about this being an outside down and engulfing type bar is it engulfed another bar that was an inside day. So if it would have engulfed more of this bar that wasn't an inside day, then maybe this would be more stronger of an indicator kind of thing. But we've got what we've got, and here's where it stopped, and it stopped right at this low, and that low is right in this congestion over here. And let me pull back and see, that's where I've got the dotted line. Now, if this doesn't hold, I think these guys are going to come down here and close this gap pretty quick. Okay, so you're always kind of looking back and saying, okay, what other type of things of interest in the pattern are there that could develop, that could become potential support or a magnet to draw it down in and fill that gap? So the first thing we're going to be watching for is, does this hold? And that's the low at about 51, what is it, 51.86. Okay, the next one is the home builders, and boy, the home builders just have not rolled over like I would have thought they had, and they're just kind of pushing sideways. I mean, this whole thing is just chopping sideways still. So the semiconductors are the first ones breaking down, and the home builders are still just pushing sideways. I really don't have anything else to say about the home builders. The financial ETF, select sector financial. Okay, so this had a nice little sharp breakdown. This almost looks like a little 5-wave move here. Now we're getting a little snapback. This could be something else in here, this congestion, but right now the short-term trend is down. Things are kind of rolling over. It's broken this long-term trend I talked about, and we'll see. Again, we've got the bounce last 2 days on the financials. But no strong bullish bars that I could tell. And let's see, let's take a look at IBB, biotech. Okay, biotech, this is just consolidating sideways in here also. Now this bar on Friday, yes, it popped up here, but it's just a little doji bar, very similar to what it did on Tuesday the 7th. So this just looks like it's consolidating in here. And it's, we broke this trend line here. Other than that, I'm not seeing anything else that's giving me any kind of indication. I mean, the intermediate and long-term trend are still intact to the high side. And energy, I believe, is still, energy select sector, energy is still trending down. But look at this, all of a sudden, we are to the lows. We got there, on Tuesday, Wednesday, to the previous low area. And so now the real question is, we come off of these lows, or do we break down out of this? We get substantial breakdown out of this, then you got to sit back and suspect that the next move down is going to be equal to this distance in here of this sideways move. So I'm going to be watching this. So we've had quite a bit of a move down already, so we'll just have to continue to watch it. The gold miners is the next one we're going to look at. So now we're kind of into our extra section of ETFs that I'm adding in here. Gold miners continue to trend down. Of course, gold's in that direction, but the gold miners have broken this support line that I drew. And so pretty strong trend, although we're getting a little bit of divergence, but I think it's only showing up on and it's very minor divergence, just over the last week or so, maybe 6-7 days, trading days. And it looks like it's consistent, although it's not real strong on DI minus. So 2 out of the 3 for sure. Real estate. What's going on with real estate? There we go. U.S. real estate ETF. All right, so again, we're continuing. We've broken down this trend line. We bounced back, we came back down, and since last week, we've bounced up a little bit. So here is Thursday before 4th of July, and then we had this week of trading. So we bounced up and basically have gone sideways over the last 4 days in here, or 3 days actually. But you can see the trend: lower lows, lower highs. That trend has not changed yet on real estate. And let's see, the next one that we're looking at is healthcare. HLV, healthcare spider ETF. And again, this is similar, just kind of pushing sideways in here. I was going to say similar to IBB, but not quite. IBB has been a little stronger, I think, at least lately. But this is just consolidating in here sideways. But again, the intermediate and long-term trend is still to the high side. It hasn't broken down. I'd be watching this though, because you could draw a line in here across this area here and be watching that. If that starts to break down below that, then this thing could roll over, and it could roll over fairly quickly. And also you want to watch the trend that this is in, right, like this, right there, and see if that continues to hold. All right, and then 2 more to go. Industrials, which I forgot to look at last week. We'll take a look at them. Okay, so the industrials are rolling over. It looks like a big symmetrical triangle up top here. It looks like it's broken down out of it. It kept pulling back and then broke again. And now in the process of breaking, it's broken a longer term trend line. It goes all the way back to late 2004, the bottom in 2011. And so right now, this is starting to look fairly negative, and we'll see. I mean, it broke out the January, December lows, and there's not a whole lot of support below this if it continues to trend down, which right now short-term and intermediate are down, and it looks like it's rolling over. Last one is technology, and the technology sector, where are you? There it is. Okay, this one also, well, this had that big negative bar here too. Similar to the was it semiconductors? I think that's what I was talking about. It did this, and I'd seen this, but this is almost identical. But so same type of situation, but it's trending down short term, short and intermediate time, broken this longer term trend line here, which we've talked about. But we're now right at the 233-day moving average, so it'll be interesting to see if we continue to get support in here, because look, here's previous lows, right? Okay, so you can almost draw the support lines for some kind of support zone in here again. And I like to make the support lines dotted lines just to make it a little different visually from trend lines. And so I'll draw this in here like this. And it sure seems like it is getting that kind of support in here. All right, that's it for today. Long video again. It's the weekend video. I'll put a key out there, a timeline, so you can look and see. And if you don't want to look at everything and you've got some things, hot buttons you want to take a look at quickly, you can just go to that portion of the video and you'll be good to go. Let's see. Oh, I did want to mention, if you felt like this video was helpful, please hit the like button, either on the website or on YouTube. And if there was something that was unclear, or you had a question about something you saw or that I said in the video, please leave a comment or send me an email at joehenches@joehenches.net. So I'd love to hear from you, and make sure that everything is clear and all that good stuff. So anyway, if you're watching this video anywhere besides my website, head on over to the website and check out the posts. I've got an interesting post that I'm tying back into that I posted July of last year on this website, and I think you'll find it very, very interesting. And if you're not a subscriber, subscribe. It gives you access to the Trade Ideas page and the free PDF I've got for you, which is basically a look inside my toolbox and the tools that I'm using. So anyway, it's been Joe for Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices. And again, it's so you can become a better trader. All right, everyone, have a great weekend. We'll talk to you on Monday.